Everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, happy Thursday, everybody. Boy, very interesting price action on Bitcoin, to say the least. So let's talk about it. So yesterday we really stayed exactly where we were right after the FOMC meeting, and very ugly, bearish, almost a tombstone, but yeah, pretty bearish doji candle here. And we just missed the 50, so this is about as clean a rejection from the 50 as you could ask for. The only thing that's still in play, though, is our channel. And the fascinating thing about this is that we have seen both sides of the channel three times here in the matter of 48 hours. So we were literally 48 hours ago, we were at the bottom of this channel. And then yesterday we hit above it, but of course rejected off of the top of the channel. And now we just barely touched the bottom of the channel. So anyway, things are, we just barely nicked it too. So our channel is exactly at 17,327. And our low for the day is 17,323. So by $4, we found support on the bottom of the channel. So the channel is still in play today. And there's no reason why we shouldn't expect it to continue to be in play. We have a little bit of cold feet approaching the 50, but I really think this is short-lived. Every single thing that I'm looking at in all of the modeling and everything that I'm kind of going over shows that we are making our way out of the bottom portion of this bear market. Do we have to come back down and find some support somewhere? Yes. But let me tell you what my speculation is on how this is going to play out. I'm betting that within the next 2 days, we exit the red zone. I'm betting we find support on the bottom of our channel, and that we slowly, whether it's 1 or 2 days from now, we retest it, because this 50 is dropping fast. Today, our 50 is sitting at 17,772. We're below 18. It is coming down. The last portion, so these high candles are the last bit that are being factored into the 50-day average, which means we're going to be down here at like 17,000 within 2 weeks. And because of that, because these are higher candles than what we've got coming in, these are the highest of the set. This will drop our average the quickest. And once we finally get to the FTX drop, things will flatten out really good. But we're going to flatten out at like 17,000. A break above the 50 is almost inevitable at this point. So I don't know if you guys are getting excited, but I'm getting excited. This is good stuff. So if we bounce off the bottom of this channel, we break up above the 50, we will need to come back and find some support somewhere. But you know where I think it'll be? I think it'll be on top of the 50. I think we break above the 50, reject on the 100, and come back and find the 50 as support, and then take off. And if I'm right, we're getting here. We're getting to the end. It's a cautious thing, because We have seen lower highs after lower high after lower high, and this next one will be a lower high. So it really will depend on how we react afterwards. But barring some unbelievable unknown news that we just haven't seen, um, the bottom has got to be close. If not, it's just got to be in. It's just got to be in. And the reason why is everyone's so pessimistic. There are rumors of every single crypto company going bankrupt, and all of that fear is priced in already. I mean, nobody will be surprised if one of these companies that everyone's speculating is going to go bankrupt just suddenly goes bankrupt. It's not going to be a surprise. It's not going to be a big sell-off event. The fear is already baked in, and that's what drives markets. It's fear. So I feel like we're getting there. You can blame a lot of today's price action on the S&P, but to be honest, after a candle like this, we were going to have a red day. It's just kind of unavoidable. This is a very big, very, very clear rejection, not only off the 50, but a very, very bearish candle at the top of a run. We've had a run. So anyway, something to kind of cool off a little bit. Well, just depends. I mean, if we stay in the channel, we could have our little cool off moment, and we could move up again. If we fall out of the channel, we have a rising 20, which we've seen support a couple of times, but pretty volatile. I mean, when we go from 17,200 to 18,400 and then back to 17,300, like we're moving around a little bit here, but it's okay. It's just part of crypto, right? So anyway, that's kind of where we are on Bitcoin. I don't feel very upset by anything I'm seeing here. It would be nice to see a little steeper incline before we come back, but we'll just play whatever we're given here. A couple of things to look at. I'm going to head over to Ethereum. Ethereum had the same thing, a rejection off of the 50. Ethereum came back down and found support on the 20 though. And so we'll see how this all plays out. There's just there are a lot of averages in play. So we talked about this yesterday, how the difference between our 200 at 1425 and our 50 at 1319 is almost $100 difference, which is unreal. Like, it's hard to find a time when all three averages were within $100. So that just tells you that we've gone sideways forever. We've been ranging in a close, tight range. So it just feels like things are getting there. Like we're starting to get there. So even though today was pretty red across the board, I'm feeling pretty optimistic. Well, let's take a look at the S&P. S&P, I have been saying ever since we touched the 200, ever since this day where we rejected off the top line, I've been very bearish on the S&P. And today is ugly. I mean, it's probably the biggest percent drop that we've seen in quite a while. 2.41, it's a pretty solid drop. Bitcoin's down 2%, S&P down 2.4. You can kind of think that they may be related, and it's possible. I mean, during the open trading hours, they can kind of feed off of each other. But the S&P closes in an hour, and I'll be very curious in an hour what Bitcoin does. If Bitcoin decides to pull up off of the recent bottom, which is what I'm kind of expecting, or if we just kind of languish here, is Bitcoin falling on its own? It's possible, but I kind of feel like we might actually see some relief when the broad markets close. So between those two things, we have some interesting things in the works. But yeah, I really feel like Ethereum is doing some good things. There has been a very, very long-term established resistance line that we broke above, and then the FTX dropped us back in, and we've just quietly snuck across it. We found it as support once and twice, and now we're moving off. And so this line is just kind of disappearing, which means that when we're crossing major resistances like this, it shows you that we're in full consolidation mode. And this consolidation mode will probably take us out of the downward pressure and into a sideways move, which will eventually move into an upwards movement. So looking optimistic. So I've been noticing this kind of unusual thing, and I tried to show this on my yesterday's video, but things got frozen. The total market cap of all crypto has been moving. It has been moving up faster than the total market cap when you exclude Ethereum and Bitcoin. So maybe I'll just put them both on the same chart so you can kind of see them next to each other. But so on top, we see the entire market cap, including Bitcoin and Ethereum. The bottom one removes Bitcoin and Ethereum. So see how up here we have, just yesterday, the whole market cap touched the 50. And now we're kind of rejecting and seeing where we find support. Likely going to find support here, especially off of the 20. And then look at if you take out Bitcoin and Ethereum, the rest of the alts, they are, in fact, fell below the 20, rejected off of the 20 and the 200 week, and now entering this kind of red day. So we're seeing a pretty big difference. This, in my mind, looks like a bullish chart. We're still climbing. There is support here in this market. And if you take out Bitcoin and Ethereum, it looks like things are kind of falling apart. So I have a fair exposure to some shorts, which I'm pretty thankful for right now. But I just don't think it'll play out forever. When Bitcoin and Ethereum gain strength and start moving, it'll pull the rest of the market with it, even if it's a little bit slow at first. But if it pulls it up slowly and then this chart looks better, the alts will start looking, more attractive to investors as the shape of the chart improves, and then we'll start seeing some good moves again. So this downturn, I think, on alts is probably temporary, but the move on Bitcoin and Ethereum, I think it's likely to be sustained. I'll show you my pattern finder. This is after yesterday's close, so we just closed here, and we matched the closest with September of 2016. So this looks pretty compelling. Seeing a move to the upside. What did we do? We came up and moved into a new higher place. Then we fell back and found support and consolidated for a bit, and then we started moving up into a higher level. This September and October of 2015 is one that we've been following for months. This has been a likely scenario for a long time. So we dropped off, we kind of pulled up, came back for support, and slowly climbed. And the level that we are trading at is similar to levels, because this long uptrend here is part of this upward grind. And when you go back enough, the 55 days ago, we were at a higher point where you can see that drop off. A little harder to see this full drop off the same way you can with this point, but look at our variance. Our variance is tighter than ever. When our worst case of the 10 is 17%, our data is getting much more believable. Like, we've found 10 experiences in Bitcoin where we've done something fairly similar, and look at the outcome. So this is 2020, and if we match this scenario, this is awesome looking. Here's July, so this is another one that we're matching, and 2 days that we match pretty close to there. And then we have 4 occurrences of October 2015. So these are just data points, different data points along the same trend, but we're matching it very closely. And then here's July of 2020 again. And then this is the only one that's a little unusual, and we kind of talked about this one yesterday, that it just so happens that our certain data points kind of matched up, but the shape of this isn't even close. So it's close if you look at each individual data point that we're looking at, but this does not really reflect what we've done emotionally and technically. So, but if I take the average of all 10 of these, so since they're below 20%, the outcomes are much more believable. And so taking the average of the top 10 tells quite a story. And this is the chart. I mean, come on, you just can't see something like this and not get excited. So it's looking pretty exciting. Let me just put it that way. All right, you guys, I think that will take care of it for today. I hope everyone enjoys, all the days leading up into Christmas, and we will follow up and catch up with everyone later on. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.